Yes, everybody, welcome to class again. So we'll be treating this question, May 2015, question 2, Ozigbondo Nigeria Limited. How many of us have taken our time to study the question? Yeah, how many of us? I didn't send the question early because I was looking at my schedule to know what to do. Yes. So if you've studied the question, can you just raise your hand up using the emoji? You can see. Yes, you can just click. You've studied the question. Let's analyze. Let's reason together. That is what we need to overcome this course. You must be able to analyze. You must be able to understand every phrase in a question. Yes, it is when you understand, then you'll be able to move on. So, who have studied this question? Nobody? We are busy. All right, fine. Yes. Why I asked us to study it is so that we can move together and be on same page. But notwithstanding, can somebody read? Let's see how we can go about this question. Can somebody read, please?
Okay. But I'm not saying this clearly.
You have it on your WhatsApp, please.
Okay. Let me see.
But I have another one. Let me bring up another one. Let me see. Let me see. I just forwarded another one to my.
Okay, I'll read from the WhatsApp now.
It's good.
Okay. Eh, Ozio Bondu Nigeria Limited is a company that is into buying and selling of plastic containers. The company is financed by a capital of 15 million naira, inclusive of reserve in a mix of 30% and 70% of debt and equity, respectively. The company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales, purchases, and inventory management. The company's policy on sales is to ensure that sales are collected as follows. Woman figure one, cash sales is 40% of the monthly sales. Woman figure two, the balance of the month sales is to be collected in the month following sales. The policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following. The company's stock policy is to reserve 30% of the month's purchases as closing inventory. The following information is available for the 5 years 2010 to 2014. All figures are assumed to be correct. Additional information. Woman figure 1. The company purchased a motor vehicle in July 2013, which was paid for in September 2013. The cost of the motor vehicle was 5 million naira. Woman figure 2. Annual depreciation for the motor vehicle is 20%. Woman figure 3. The cash balance as at 31st December 2011 was 4 million naira. Woman figure 4. The company's salaries, rent, and expenses were paid in the month they were due. Required. A. Prepare a profitability statement for 2012, 2013, and 2014. B. Prepare a cash flow statement for 2012, 2013, and 2014. C. Determine and comment on the liquidity ratio. 4. Compute the gearing ratio. Wait, am I still on
All
the
right.
question?
Thank you very much. Thank you very much. Yeah. Thank you for that. Now, if you followed clearly, the question is testing our ability on profitability statements, cash flow statements, and yes, profitability statement, cash flow statement. So also that we should determine and comment on liquidity ratio. Yes. So my major concern is on point A and B. So if you look at this question, the company's capital structure is what? Because you need this information to solve your capital employed. Yes, to determine your gearing ratio. Your gearing ratio. So now, if you study this question, the company capital structure is a mix of what? Is a mix of debt and equity. That is 30% of debt and 70% of equity. Now, please take note of this point. The company's policy on sales is to ensure that sales are collected as follows. You must understand this part very well. Yes, to avoid any confusion. The company's policy on sales is to ensure that sales are collected as follows. As follows. One, cash sales is 40% of monthly sales. It means whatever sales you have in a month, 40% out of that sales will be what? Will be cash. The remaining 60% will be what? Credit sales. Credit sales. They will not tell you that 60% is credit sales. You have to know. Yes, it's not everything the question will make clear to you. So you have to know that once so portion is 40%, the opposite should be what? 60%. So if cash is 40%, if your monthly sales is made up of 40% cash sales, it means credit sales will be what? 60%. Take note of that, please. Now, point two, the balance of the month sales. That is the balance that is not cash sales, that the balance that is credit sales, that you didn't collect cash on it immediately, which is the credit sales, is to be collected in the what? In the month following what? Sales. It means if I should have overall sales of 100,000 naira and a fraction, 40% out of the 100,000, which is 40,000, is cash sales. The remaining 60%, which is credit sales, will be collected in the next months. Let's assume we have overall sales in January to be 100,000 naira. 40% out of that 100,000 is cash. The remaining 60% of that sales in January will be due for collection in February. Take note, understand this. Take note. The balance of the month sales is to be collected in the month following what? Sales. Sales. So also, the question puts that the policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following. All supplies in the month following. It means any purchase I made a purchase in the month of January. It means I'm to settle the purchase in the next month. The policy on purchase is in agreement with the supplier's policy, which is to pay for all supplies in the month following what? In the month following. In the month following. Take note of that. Why am I analyzing this? When it comes to you preparing cash flow, you have to take this statement into consideration. These statements, you have to put this statement into consideration because in January, what is the cash? Yes, overall sales can be 100,000 naira, but what is the cash inflow in January? Now, the remaining balance that will be due in February it will also constitute part of the sales receivable inflow in February. I don't know if you are getting this explanation. All right. If you are getting the explanation, all right, fine. Okay. Yes. So let's just this is a preliminary explanation. So when we go to the computation, I don't want too much confusion. That is what I'm trying to explain now. Yes, because if you have overall sales, when you talk about sales, sales can be cash, it can be credit. So when you're trying to compute your cash inflow, do your cash analysis, you're always considering sales that has to do with cash and receivable due in that particular period or month that you will collect in cash. But anything on credit will not be recorded in the cash flow. In the cash flow. So the policy on purchases is in agreement with suppliers policy, which is to pay for all supplies in the month following. The company's stock policy is to reserve. Take note again. The company's stock policy is to reserve 30% of the month purchases as closing inventory. If I should make a purchase of 100,000 naira, 30% of that purchase should be what? Should be closing. The company's stock policy is to reserve 30% of the month purchases as closing inventory. Why are we bringing this? Because the question asks us to prepare what? Profitability statement. For you to get your profits, what is the format? You have your sales. We are applying the vertical format. Your sales plus your closing stock, you less your purchases, you less your opening stock, you get your gross profits, gross profit less expenses, less rent, wages, depreciation, and the rest of it, like that. You get your profit. So profitability statement is just like your trading account now. Yes, your trading and profit and loss account. Yes, so that is the format of for you to get your profit. So I'm saying this that the issue of stock policy, you have to consider that, because when you're preparing your profitability statement, you have to look at bring in your closing stock. You have to bring in your opening stock. So the company's stock policy is to reserve 30% of the month's purchases as closing inventory. The following information is available for the 5 years 2010 to 2014. Now look at the question. The question is a very dicey one that if you are not careful, you wonder what to do. Even when you are going to the Pathfinder to look at the solution, you just get yourself confused. Yes, because you must understand what this question is. If you look at it, you see monthly sales, right? Monthly sales. Now, under 210, you're seeing 3,400,000. Yes. In 211, you can see 3,600,000. Those are the monthly sales for each of those months. It means for January, the sales will be what? In 210, 3.4. In February, the sales will be what? 3.4. In March, the sales will be what? 3.4. I think there is a place the question mentioned that the sales are evenly. Yes. Where is the point? There is a point in the question that states that yes, sales are evenly spread. That is, they are equal throughout the whole period. Throughout the whole period. Can you see that portion? Can anybody see that part? Anybody in this class? All right. Okay, fine. People are there. Okay, fine. All right. I'm trying to. There is a point. Okay. Yes. The company's purchase, the cost of motor vehicle. Okay. Monthly sales. Okay. Notwithstanding. So the monthly sales in 210, what that 3.4 implies is that in January, the sales is 3.4. In February, the sales is 3.4. In March, the sales is 3.4. In April, the sales is 3.4. All through the year, the monthly sales will be 3.4. In 211, the monthly sales all through each of the months, it is expected that you have 3.6 as your monthly sales. Now, the question will now be, the question is telling you, prepare a profitability statement for 212. When you are trying to prepare profitability statement, will you start preparing month by month? The answer is no. The answer is no. You have to get the total sales for the year. The total sales for the year. And how will you get the total sales for the year? Is you multiplying the monthly sales by what? By 12. By 12. So also the monthly purchases throughout 210, it is expected that you have a purchase of what? 2 million for January, for February, for March, for April, for May, for June, for July, all through. You have 2 million. It is stated monthly, but the question is saying prepare profitability statement for 212, 213, 214. So for you to get the annual purchase, take note, overall purchase. Now we are not looking at credit purchase or cash purchase in this respect. The overall purchase will be what? Will be for 210 will be 2 million multiplied by what? By 12. By 12. By 12. That will be the monthly purchase. So also in terms of salary, monthly salaries, for you to get the overall salary in that year, it will be what? 3.50 multiplied by what? 12. Applies to other years in that respect. And for monthly cash expenses, you have 200,000 for 210. For you to get the annual, to be 200,000 multiplied by what? By 12. Now, let's talk about the issue of closing stock and opening stock. With what we've done over time, you shouldn't have issue with determining the opening stock and closing stock in this regard. Now, the question is telling you to do what? To prepare profitability statement for 212, 213, and 214. You might be asking, why are they giving me the data for 210, for 212, for 211? Why they want me to prepare for 212, 213, 214? Yes, because if you look at the question that the company stock policy is to reserve 30% of the month purchases as closing inventory. It means that the closing inventory, the closing inventory for December 211 will be the opening for January 212, isn't it?
Yes.
The closing inventory for December 211 will be the opening for January 212. Take note, the issue of stock now, the issue of stock is a monthly issue that the closing in January 212 will be the opening in February 212, and the closing in February will be the opening in March. So stock is a monthly issue But the point I want you to note, when it comes to December 2/11, the closing of December 2/11 will be the opening for that year, for the year 212 rather, for the year 212. And the closing for the month of December 212 will be the opening for January 213. Take note of these silent issues, because when we come to solve, I expect us to move seamlessly. So that is why you are seeing the data for other years, and we might still use some of those data again as we solve our cash flow statements. As we solve our cash flow statements. So with this, okay, there's still some other things. The company purchased motor vehicle in July 2013. Take note, 2013 is a full year, but purchase of motor vehicle occurred when? At the middle of the year. At the middle of the year, which is July, and which was paid for in September 2013. It was paid for in September 2013. In September 2013. You must note that. You must note. You must note that. How much is it? It's the cost of the motor vehicle is 5 million. 5 million. So it was paid for in 2013. And also that annual depreciation for the motor vehicle is 20%. So in the first year of purchase, when you start using it, you purchase that motor vehicle as at July. If you want to compute depreciation, it will be half year depreciation. So you count from July, August, September, October, November, December. That is 6 months. So 6/12 in relation to 5 million multiplied by 20%, you get your depreciation. It's not a full year depreciation. Take note, please. The asset was purchased as at July. So from July to December is how many months? 6 months. So if you want to apply your depreciation, it will be in that regard. And also that the company's salaries, rents, and expenses were paid in the months they are due. There is no carryover here. There is no carry forward here. So expenses such as salaries were paid in cash immediately they are incurred. So the question is now telling us to prepare profitability statement for 213, for 212, 213, and 214. So what are we going to do now? Let's see. Let's see what to do. Let's see what to do now. The heading is very important. The heading. The heading is very important. At least when you can write your heading very well, to give you confidence to even start attacking the question. So you must build that confidence. So let's quickly prepare the profitability statements. So I know my Igbo brothers can pronounce this name more than me, so I'm trying to be very careful about the way I pronounce it. Ozigbondo Nigeria Limited. Ozigbondo. Ozigbondo Nigeria Limited. Profitability statements. Profitability statement for 212, 213, and what? And 214. So now, what are we going to do? What are we going to do? So we'll present it this way: 212, 213. We have it as what? 214. So for you to prepare your profitability statement, the first thing you have to look at, working based on the vertical format, is our sales value. Our total sales for the month or for the year 2012 will be what? From the question. Our total sales for the year 2012. Somebody will ask, why are we not using 210, 211? The question is saying what? Prepare profitability statement for 212, 213, and 214. So the total sales for 212 will be what? Can I get a response?
50,400,000.
Okay, 50,400,000. How do we get that? 4.2 multiplied by 12. 4.2 multiplied by 12. 4.2 multiplied by 12. So we have it as 50,400,000. The sales for 213 will be what? 4.8 multiplied by 12. You need to have your calculator with you. I have my own here, even though it's a market woman calculator.
57,600,000.
Good. 57,600,000. For 214, we have it as what? 7.2 multiplied by what?
12. 86,400,000.
86,400,000. 86,400,000. Since we are working based on the vertical method, what we do here, we add our closing stock. Add what? Closing stock. We add our closing stock. Now, what will be our closing stock for 212? For 212. The question says that what? In terms of the stock policy, the company's stock policy is to reserve 30% of the month's purchases as closing inventory. As closing inventory. So what will happen in 212? Any explanation to that? In 212, what will be the closing stock value?
We'll multiply that of 2011 by 12, then we'll take the percentage
Okay.
out of it, and it will now be the opening inventory for 2012. That
Okay.
will be 2,400,000.
No, let's talk about the closing stock first. Though I know the opening should come first, but what will be the opening
Okay,
stock?
it's closing. Okay.
What will be the closing stock? Sorry, yes, the closing stock. The company's
The
stock.
opening stock, the stock for 2012 will be the opening stock for 20. The closing stock for 2011
Stock.
will be the closing opening stock for 2012.
Sorry, I want to get the background that is noisy so I can move to the person. Closing stock. Please read this statement clearly, please.
It
Where is
said the
it?
company's stock policy is to reserve 30% of the month's purchases as closing inventory.
Very good. So the last month in 212 is what?
December.
It's December.
So what is the monthly purchase each year?
Would The monthly purchases is 2,400.
400.
The monthly purchase is
2,000.
2,400,000.
It's two
That is
million
too
eight
serious now.
hundred.
It's 2,800,000.
2,800,000, right?
Yes,
Sir.
sir.
So read the statement again. The policies, the company's stock policy is to reserve 30% of the month purchases as closing
Okay.
inventory.
Inventory.
Okay. Okay.
Closing inventory. So the last month in year 212 is December, right?
Yes, sir.
Yes,
The
sir.
monthly purchase is what? 2.8, right?
Put 0.8. Yes,
Yeah.
sir.
So 30% of 2.8 should give you your closing stock.
840,000.
840,000. 840,000. 840,000. For 213, it will be what?
960,000.
960,000. For 214, it will be what?
1,440,000.
1,440,000.
1,044,000. Let me stop here. Somebody is not getting what we are doing.
Sorry, sir, I'm not getting it, sir.
My own is that I went off and just came in again now.
Okay, welcome back, sir.
So thank you.
Yes, I don't want us to spend time here and not get what the value for what you are spending your time on. So that is why I'm asking. So the point is this. This is the English. Me, I like English very well.
English.
This is it. This is it. The company's stock policy. The company's stock policy is to reserve what? 30% of the month's purchases as closing inventory. As closing inventory. Now, we are asked to prepare what? Profitability statements for 212, 213, and 214. Now, in 212 now, the last month of the year is what? December. What will be the closing inventory for that year? It will be what? The monthly purchases is clearly given. For 212 is what? 2.8, 2,800,000. Now, what will be the 30% of 2,800,000? This 30% is not just
Sorry,
manufactured.
sorry, sir. But that required is a prepare profitability statement for 2012. I thought
Yes.
it will be 2011 December. That is 2,400,000 will be the closing inventory. That
No.
2,800,000 will be the opening inventory.
Mbano, sir. This is it, sir. This is the statement. We allow the question to lead us. The company's stock policy, sir. The company's stock policy is to reserve what? Is to reserve what?
30% of the month's purchase as closing inventory.
Yes. Now, the month purchases in 212, the monthly purchases is what?
2 million.
2.8, 2,800,000. So as at the last month of the year, which is December,
Okay,
for
we're
you
considering that 212. Okay.
for you to get the closing inventory will be 30% of 2.8.
Yeah.
Yes.
I've
That would
gotten
be,
it. I've gotten it, sir.
all right. Somebody is raising up a hand. Yes.
Okay, sir. Sir, please, what if we don't have this statement? Like if you don't have the 30% statement, what would
The,
have been
que-
the
The question will always give you a leading. If you check what we've done over time, there will always be a statement. When we solve Ikechukwu, there was a statement that was leading us somewhere. So there will always be a stock policy. Just as we were discussing in FM, we have credit policy of an organization. Yes. So in some organization, they have their stock policy. They have the way they do things. So there will always be sorry, I don't know why somebody is trying to call me. So the point is this: there will always be a direction. Now, if you follow the class over time, you would have seen from various questions we solved that relates to either production budget, there is a statement in relation to stock, either your opening or your closing. Yes, there will always be an hint on how you are to derive it, on how you are to derive it. So
Sir, please, I want to. Okay.
All right, speak
I
on,
have a
please.
question.
All right, ma'am.
Sir, please, you said for this one now, they're giving us information relating to closing inventory. Is that why we're following the question we're doing it? You say we're using vertical method, right?
Yes, we're using vertical
Opening inventory instead of add.
No, if you are
purchases.
using horizontal method, it will be your opening inventory plus add purchases. You understand? If there is any
Yes.
cost of carriage inward, you understand? If there is any return outward, you less. Then you have your cost of goods sold and cost of goods available for sale. Then you
Yes.
now less your closing inventory. But we are doing the other way around now.
Reverse. Is it
Yes.
the question now? My question is it this question now that is leading us to use that method?
Yes, as at this level, we are not supposed to be preparing using horizontal method. We are supposed to prepare using a vertical method.
Okay.
Yes, yes. You know that horizontal method is for secondary school.
All right, sir.
You know now you're a professional. You understand? The fact that you can enter the hall to write the exam, you're a professional. It's not everybody that can enter the hall. There was a diet. I was begging somebody to enter the hall.
Yes.
Yes.
Well. All right,
So it's not
noted,
easy
sir.
to
Thank you,
enter
sir.
the hall though.
So for you to enter the hall, sir, and write, you are a
To pay,
professional.
sir, to pay the money. Me is pay. I don't used to pay. That was why I didn't pay last diet.
So
Thank you, sir.
But in case the thing is now becoming very serious that you want to hook, just do.
Your line is breaking, so I don't know if it's only from my end.
I understand my line is breaking. It's quite a number of calls trying to come in, so I'm just rejecting them.
All right. Hello, sir. Please, I have a question.
All right, what is the question?
They said prepare a profitability statement for 2012, 2013, and 2014. So that
Yes.
means that the ending balance in 2011 will be a beginning balance in 2012, which is the
And
720
in terms of opening inventory,
closing.
right?
Inventory.
Yes, opening inventory.
Yes, we've not come there. We are still we are just trying to analyze the closing. Yes, and that is it. That is how it will be. Yes.
Oh, okay.
Yes. So hope everybody is clear with closing inventory.
Yes, sir.
Yes, sir.
So when you add now, the result will be what, please? Here.
It's clear.
51, 240,000. We have 58, 560. We have what? This should be 18, 86, 400. This 144. This should be 87, 87, 840. 840, yes. 87, 840. You can confirm these figures, please.
Confirm.
Correct.
So the next is less. You less the following. You less the following.
I want to beg something. I don't know if it is possible. Try.
What is that, sir?
Okay, thank you. Thank you for granting me that. I went off. There was a time I went off. I've understood this closing stuff, but just give me a clue on that sales. Just 2012. Let me know if I can get others, please. Just sales 2012. I've been trying to swallow it to know if I can.
Okay, 2012. How many months make up 2012, sir?
It's 12 months now.
Now, this information is what here, sir? Monthly
Monthly
sales, right?
sales. Yeah. I was aware when you were saying it.
So to
Each
get
each month 4,200, 4,200,000 each
yeah,
month.
so to get the overall sales for 2012, what will you do, sir?
Okay, 4,200,000 times 12 now.
Yes, sir. So can you do that, sir? Can you just try
Okay,
this?
sorry. Go. Goodbye. Thank you, sir. I've gotten it.
Yes. Once we are moving and you don't get anything, don't just say it, sir. Don't shy.
It's
Yes.
okay.
Don't be shy, please. Just say it. Yes. That is why this is a different class, right? So I think I should be able to accommodate every question from this forum. We are not much. Yes. So the point is the next is to less the following.
Inventory.
Okay, if you want, you can come with you will less your purchases. Do you know that?
Okay. So
So what would be your annual purchase now for 212 purchase? That is 2,800,000 multiplied by what? 12.
33,600,000.
33,600,000. For 213 should be what? Should be 38,400. And for 214, it should be what? It should be
57,600.
So also you less your opening stock. Your opening stock. Now for 212, your opening stock will be what?
To be closing inventory of 2011.
He said, what will be the closing inventory there?
That's 950.
For
720.
0.3 multiplied by the purchase of 2,400,000.
Is that what it sounds like?
720.
720.
720.
720. That is for 212. Somebody is not getting it.
Yes, to meal.
All right.
Yeah, so I need a recap as regards then opening stock.
Okay, this is it. This is it. You know, the beginning of 212 is what? Is January, right? It's
Yes, sir.
January. The month before January is what? December 211. December 211. So the question says the company stock policy is to reserve 30% of the month purchase as closing inventory. The month before January 212 is December 211, right?
Yes, yes.
So the closing stock of December 211 will be what? 2.4 multiplied by 30%. You have what?
720.
So that closing,
20,000.
yes, that closing stock in December, when you move it forward to January 212, what will it serve? It will act as what?
It starts as the opening stock.
Opening stock.
The opening stock. And that is how we derive 720. Is that clear?
Okay. All right. Okay, yes, yes.
Right. So we have 720. Now in 213, the opening stock will be what?
840. 840.
So you go to the monthly purchase of 212 and get 30% of it. That will be the opening in 213. So we have it as 840. For 214,
960.
960.
960. Before I move further, is everybody clear? Are we clear?
Yes, sir.
Right. Okay, it's fine. I can see the signal that we are fine. So to get the gross profit, it will be what? To get the gross profit, it will be what? Your sales plus closing stock is 51,240 minus 33,600,000 minus 720. You have what?
$14 million 222,000. 220,000. 14 million 220,000.
14
Please
million.
confirm.
14
No,
million.
16 million
920.
920.
920. That was what,
16 million
sorry,
920.
920.
5,1,240 minus these two here. You should have this. For 213, the gross profit will be what?
19 million 320.
320. 19
19.
million
17 million 320.
Fine. For 214 to be what?
29
29
million
million
29
880.
28.
Hello, Mr. Tope. Hello, sir.
Hey, man.
Okay, sir.
I can
I'm
hear you.
so sorry for drawing you back.
No
Please, I still
problem.
need a sort of a review. Okay, I'm sorry for drawing you back. a recap on
Alright.
that purchases. I'm trying to put something down. How we derive the first one under 2012.
Yes.
Thank you.
From the question, you have monthly purchases, ma, from the question. You have monthly purchase, ma. Isn't it from the question? Can you confirm, ma? Monthly purchase for 212 is 2.8, right?
Yes, it's two. Exactly.
So multiply that by 12, ma.
Okay.
Yeah, same thing as what happened at sales.
Okay. Okay.
Is that fine, ma?
I'm fine. I'm fine. Thank you.
All right, good.
Hello,
Right.
sir. That's okay.
Yes, I'm with you.
Sorry, sir. The closing stock for 2012.
Yes.
I don't know why we're using 840 at the beginning, because under the opening stock we used 720, which was for 2011, and we're now using 840 for 2012. Yes, for 2012.
840 for 2013.
Because the 840 is under 2012. That's what I'm asking. Closing stock.
The
Yes,
closing
ma'am.
stock, the
Then
closing stock for 212 December. When you are moving to January 213, what will be the opening? The closing stock in December 213, in December 212, you would
Yes,
move
sir.
it forward to January 213, right? As
Yes, sir.
openings. This is it, isn't it?
Yes, sir.
The closing stock in December 213, you move it forward to January 214 as opening stock.
All right, sir. So the figures must always be there in order for us to be able to move it.
Yes, but in the question, they've already given us the hints that 30%, see it's that the company's stock policy is to reserve 30% of the month's purchase as closing inventory. That is why they are giving you other values, other data
All right,
before
sir.
the years they
Thank
want you to actually compete for. So
All
that
right,
you
sir.
quickly go back there and use the information required.
All right, sir. Thank you, sir.
So the next thing is to, because we want to get, gross profit is not your main profit, right?
Benny.
You
Yes,
have
yes,
sir.
sir.
you have some other expenses that you have
Mm,
to
to deduct.
deduct. And what are those expenses? We have things like salaries, rents, we have cash expenses and the rest. Yes, so let's see what we can do regarding that.
Now, what about this information of this motor vehicle they bought, purchases, under purchases? We don't need the information.
Purchase of
No,
motor vehicle is an asset.
yes.
Oh,
The
okay.
only information you need there would be your depreciation. And the
Okay.
depreciation will be in which year? Starting from which year?
I don't know.
It should start from
2013.
2013 or 2011.
So we have these expenses.
2013.
The expenses,
6 months.
we have one, salaries. The value of salary in terms of annual value of salary will be what?
5,160,000.
Yes, 5,160,000. So if you see the salary is monthly, right? So overall for the year will be what?
No, sir, it's not monthly. For 2014, the salary is 480.
Yes. Monthly salaries for 212. The salary is what?
430,000
For
What?
30,000.
multiplied by 12 will have 5,160,000 naira.
Sorry, let me just respond to the message. All right. So please, the monthly salaries for 212 is what? 430, right?
Yes, sir.
So 430 multiplied by 12.
5.160.
1,000.
5
5,160,000.
million 160,000.
So that will be the value for 212. 5,160,000. 5,160,000. For 213, it will be what?
5
5
million
million
160.
160,000.
Still 5,160,000.
Yes, sir.
Now for 214, it will be what? I think
5
the value
million.
has changed. 480
Yes,
now.
sir. 5,760,000. 5,760,000.
Correct.
One million multiplied by 100,000 multiplied by 12. You have it as what?
1.2 million.
1.2 million.
1.2 million. For these two, we have it as 1.2 million. Which other expense do we have?
Depreciation.
Cash expense. We have the cash expenses.
Yes, cash expenses. For 212, we have what? 240, right?
Yes,
Multiplied by
sir.
12, you have it as what?
2,880,000. 2,000.
2,880,000. Cash expense is 2,880,000. Now, for 212, it will be what?
3,120,000.
That is 280,000 multiplied by 12.
3,120,000.
Yes, we have it as 3 million what?
120,000. 120,000.
No, 3,360,000.
3,260,000.
3,360,000.
3,360.
Oh. It's 260. 260 multiplied by 12.
280 multiplied by 280. 12.
Okay, sorry.
280.
So 4,320,000. So what else
Yes.
do we need to put here? Depreciation.
Sorry, are we
Depreciation.
not doing it? Okay.
Depreciation. And it was purchased when the asset was purchased when?
2013 July.
July
2013.
230.
So the annual depreciation, all things being equal, will be what?
2015.
This is it. Confirm.
20%.
20% of 5 million will give you what?
100. Okay.
1 million.
Divide by
1
two.
million
Divide by two because it was purchased.
500,000.
Yes,
500,000.
we are dividing by two because it was purchased at the middle of the year, July to December, is 6 months. So for 213, we'll have it as what? 500,000. 500,000. For 214, it will be what? To be the full year
1
charge,
million.
which will be 1. Sorry, so many calls. I did a transaction. Some people are trying to know what the transaction is. Me on WhatsApp. That is why I can say I'm just trying to respond to some of them on. So the next thing we have to do is to do what? To get our what? Net profit. We have to get our net profit. So our net profit will be what for 212?
7,682,000.
Net profit for 212. How do you get your net profit? Gross profit minus all these whole expenses. You have your net profit. So for this, it will be what? 7 what? 680,000, right? And for this, it will be what?
17,960,000. Please confirm.
19 million minus 5160 minus 1.2 minus
Oh, I wrote
3360.
29 million.
9,100,000.
Sorry.
9,100,000.
Sorry,
Yes,
please.
we have it. 9,100,000. And for this, minus all these,
70 million. 70 million.
17 million.
320.
17 million.
17 million. How many marks is this one? Prepare a profitability statement, 10 marks, free of charge.
Free of charge when you're Mr. Tope.
Yeah. Solving it will be very easy, just interpretation.
I'm with you, man.
If we use the other, the horizontal method or the formula,
Yeah, format.
would there be any format? Would there be any penalty for that?
said for children.
No,
For
there won't
children.
be.
So we are
Eh,
adults.
There won't be. If you think in the exam hall that is what you can do, yes, please do it. Yes.
Opening inventory, add purchases, less closing inventory, gross profit,
That's
less expenses.
don't go the way of children, or go the way of adults. So see,
Well done, Mr. Tokwe.
Okay.
Hello, sir.
I'm with you, man.
Okay. And
I'm with you.
I want to make reference to this format that we use, this vertical method.
Yes,
So
ma'am.
now I want to ask, perhaps in a question, I mean, in an exam, something, they may set it in another way. Is there any other method that we can use to solve a profitability statement also?
Yes, that was
Apart
what she
from that
was saying.
horizontal that you mentioned, I know that you mentioned that horizontal,
Yes.
vertical. Is there any other way, another way also?
No, I think these are the
Okay.
major two approach because we are giving it in years now. 213, 214, even that
Yeah.
horizontal approach, it will not be convenient for you because you have to do each year on different sheets. You understand? It's that T format. It will not be convenient.
Okay.
Yes, except you use one page
All right.
Each year.
for 12, another page for 213. So all those
Okay.
process.
Okay, I
So
understand. The reason why I'm asking is that they may try to repeat question in another way that requires another format so that we can know all the format that entails this profitability. That's the reason why I'm asking.
okay, no, this one is just know this one, man. This is the standard, man.
Okay. All right. All right.
Yes,
Thank you.
And there's
yes,
another
ma'am.
observation. If you notice, the question is going in line with this format, where it's bringing closing inventory first. So it's easier if you follow the question.
Yes. So you can see the closing for 212, we are bringing it down to 213. Yes, in that way. So this approach is much more better. And as an accountant, as a professional who will be evaluating financial statements, this is what you'll be seeing. If you pick financial statements of organizations, this is how it will be presented. So trying to do
It's
that
true.
primary school method is
Hmm.
out of it.
Okay,
Yes.
it's true anyway. Thank you.
Yeah.
Thank you,
Hello,
sir.
sir. Hello, sir.
Yes,
Please,
sir.
Hello, Mr.
in that. Okay.
All right. All
We
right.
didn't make
Let's
use of. Hello, sir. Please, sir. We didn't make use of that cash balance as at 31st December 2011, 1 million.
yes. That will be make use of in cash flow statement. It's
Okay.
not where is even the statement? Cash balance as at 31st December.
Mm.
Yes, that's
Under additional information.
yes. That will not come here. It will not come under this. What is even the money? Cash balance as at 31st December was 4 million naira. 4 million naira. So let's proceed and see if we will use it. Let's
All right,
proceed.
Mr. I just want to ask if we can see other questions related to this topic.
You said?
If we can have some other questions, probably solve another one once we are through with this.
No, I
So
won't
that
solve. I won't solve another one. Me, I will send it to you to solve.
You want to bring another assignment? Oh, Jesus. We have plenty unfinished business.
Some people are not only writing PM, but people that will enjoy this my section more
Work in
are those
progress.
that will write PM only because the pressure I'm putting on PM is something else.
I've been reading PM too much too. Just send the question. Send it.
So if you only have PM, you appreciate this forum more because I will not allow you to rest. Yes, that is just it. So let's move to the next one, which is because the time is almost we are getting to 10 already, and this other part is prepare a cash flow statement for 212, 213, and 214. Let's see what we need to do very fast about that. Let's see. Let's see what we need to do. These points, you must be very attentive at these points now. That is Ozubondu. Cash flow statement. Cash flow statement for 212, 213, and 214. So what will happen here? We'll have it, let's see. Let me present it this way. Column. So in 212, we'll have, let me say 212, 213, 214. Now in cash flow, what are the two things you are trying to bring forth? Your cash inflow and your cash outflow, right?
Yes, sir.
Cash inflow and your cash outflow. So first, your cash inflow, what will be the component of your cash inflow? In these questions, we'll have sales. And we'll also have what? Receivables. We'll have sales. We'll also have what? Receivables.
Receivable.
Now for sales, it's clearly put that cash sales is 40% of the monthly sales.
So
40% of the monthly sales. So in 212, the total cash sales will be what? In 212, what will be the total cash sales in 212?
I think it's
50,400,000. That
160,000.
20,160,000 naira.
20 million. How did we get that?
Like the 212, the cash is 4,200,000. You times it by 12, then times the 40%. You have 20,160,000.
As the cash sales, right?
Yes,
sir.
sir.
So the remaining balance will now be what?
Receivable. It's
It will be
credit sales.
credit on sales on credit.
To be sales on
That the remaining
credit.
60%.
Yes, will be sales on credit. Okay, that is a very good one. That is a very good one. I don't know if everybody is on that page. Is everybody on that page? Okay. All right. Fine. This is the overall sales, right, for the year. It's clearly put that 40% of the monthly sales is what? Is cash. The remaining 60% will be what? Credit. So since all these are the total sales, 40% of these annual sales should give you your cash sales. The remaining balance should give you what? Your receivables. Will give you your receivables. will give you your receivables.
Mr.
Yes,
Tokwe, sorry, I'm not getting it, sir.
this is it. Though I'm still explaining the issue of sales. The overall sales for the year is what? 50.
2012, we have 4.2.
That is the, yes, when you multiply that by 12, you have what?
Coming.
5,400.
Okay, 5,400.
So for you to know the cash sales for the whole year, 40% of this will give you what? Will give you 21,160, if I'm not mistaken. Then the remaining 60% will be what? Receivables. Will be receivables. But take note, there is something here. The balance of the month sales is to be collected in the month following the sales. Now, the balance of December sales in 2/12 will be due when?
2/13.
Very good. Very good. It will be due 2/13. Take note, it's not all the whole 60% that is receivable in that particular 2/12, because the balance of the last month of December will be due January 2/13. Will be due January 2/13. I don't know if you get that. Did you get that?
Yes, sir.
Yes, see the statement here. The balance of the month sales is to be collected in the month following sales. It means part of the receivables that you determine, that of December of 2/12 will not be due in December, will be due for receivable in January what? 2/13. So when you get your receivables, is 60%, you must determine that of 1 month and post it to the next year. So let me just let's show that as a working. Let me show that as a working. So the cash flow, we have sales. The overall sales is what? The overall sales in the question is what? Is 50 for 2/12 is 5,400, right? Multiply by
Yes, sir.
0.4 for you to get your cash sales.
So I think, hello, sir.
I'm with you.
I think we will start from 2/11 because the outstanding of December 2/11 will collect it by 2/12.
Don't worry, we'll get there. Let's just
Okay.
follow the. So we have ourselves. The cash value. The cash value will be what? 5,400,000 multiplied by 0.4. We now have it as what? What will be the results?
2169.
2160.
So we have it as 2160. I'm just trying to show the working. I'm not supposed to show it here. Now, what will be the balance? 5,400 or 60% of that 5,400, whichever way you want to do it, minus 20,160.
That's 3214.
You have
214.
30,240. This is the total credit sales for the year. But take note, that of December of 2/12 will not be due in December, right? It will be due in January 2/13, right? Isn't it?
Yes, sir.
So what will be the value you have to less from this value here? What will be the value? You divide this 3240 by 12, you know the monthly value of the credit. You understand? So I think you should have 2520. When you do that, you will know the total value, the amount due. So what will be the value?
Is it the addition with the 20,160?
So we are having 27,720.
27,720 minus 3240,000. 27,740. Okay. 27,740. Okay, fine. Yes.
It's
27,720, right?
20. Yes, sir.
Yes. Very good. 27,720. Yes, 27,720. So this is the total credit sales for 212. For 212. Now for 211, there should be a brought forward, right, of receivables. For 211, there should be a brought forward that is due in 212. Though we are preparing accounts for 212, 213, 214, but there will be a receivable brought forward from 212, right? From 212. So you need to compute in 212. Your total sales is what? In 211, sorry. Your total sales is what?
43,200,000.
Yes, 43,200,000. How did we get that? 3.6 multiplied by 12, isn't it?
Yes, sir.
3.6 multiplied by 12, 43,200. So what portion of this?
3.6.
So what portion of 43,200,000 is cash sales?
17,280,000.
17,280,000.
Fine, 17,280,000. Let me show it here so that nobody will be lost. 211. Now the total sales, we have it as what? 43,200. The cash sales will be what? Cash sales is 40%. 40% of the above. The result will give you what? 17.
280.
The credit sales will be what?
25,
25, 920.
Credit sales 25,920. Now, as I've explained, that in 211, December credit sales will be due when? In 211, will be due in January 212, right?
20.
Will be due in January 212. So the monthly credit sales will be what? Let me just show it. Monthly credit sales will be what? 25,920,000 divided by what? 12. When you divide, you have what as your figure?
2,160,000.
2,160,000. So
Sorry.
if you make these credit sales in January 211, it will be due when? In February, right? Isn't it?
Yes, sir.
February credit sales will be due when?
March.
In March. March credit sales will be due when?
April.
April,
April credit sales will be due when?
May,
Let me jump. December credit sales of 211 will be due when?
January
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 2012.
2012.
That is why this amount 2160 is relevant in 212. That is why this amount 210 is relevant in what? Is an inflow in 212. Is
Sorry,
an
sir. I think you need to check that card sales. It should be 17,280, not 17,820.
okay.
Yeah.
17 to
is 280. Seventeen to 80 is correct.
So hope we are clear with this, please.
Sorry, sir, please, I didn't get how you got the monthly credit sales.
The annual credit sales is what? 25,920, right? Isn't it?
Yes, the 60%.
Yes, sir.
So to get it monthly, 25,920 divided by 12 will give you what?
okay, to give us 2,160.
2,160,000.
2,160,000.
Thank you, sir.
Please, if your background is noisy, can you just mute yourself? So that so in simple term, I have to move very fast now. In simple term, what I'm trying to say, if you are writing, put down all these in your notes. Yes, because I'm deleting it, please. I'm deleting all these. All these are just workings I'm showing. I'm deleting it. Please just get this basic understanding so that when we move to other years, we won't have to waste much time again. If you know you are not clear at this point, just say it, please.
Sorry, alone, I'm not clear.
At what point? At what point?
I only got the cash sale. The credit sales that you were interpreting from these 5,400 downwards, I did not really get what. That was why I was just quiet.
Yes, in the question, credit sales in January will be due when? Where is it? The balance, see, this is it. Cash sales is 40% of monthly
40%
sales.
monthly.
So the balance of the
balance-
month sales is to be collected in the month following what?
Following
Sales.
sale.
Any credit sales in January will be due when?
Will be due credit sales. It will be due in the next year or the
In the
next
next
month.
month.
In the next
Yes.
month.
So
So we'll
now,
multiply that of the next month times 12. Am I correct?
no.
Okay, we've already multiplied from the beginning.
This is it. This is the overall sales. Let's use 211 as example. The overall sales in 211 is what? 43 to 200,000, right?
Yes, sir.
What is the cash percentage of this whole value?
40%, sir.
When you multiply 40% by this, you have this, right?
We got 17 to 80. Yes, sir.
The remaining balance will be what? Your
24.
credits.
Okay, sir.
Your credit sales. This is the annual overall credit sales for 211, isn't it?
Yes, sir.
What will be the monthly credit sales if this is the total for the year?
We divide it by 12. 25,920 divided by 12.
It means in January, your credit sales figure will be what?
2,160,000.
This money, 2,160,000, will be due in which month?
will be due in
January
February, sir.
2012.
2012.
This
If
will be
this
December
if this is the credit sales in January, this money will be due for collection in which month?
in February.
Good.
February.
For February credit sales, it will be due for collection in which month?
In March, sir.
March.
Fine. Let me jump. December credit sales will be due for collection in which month and in which year?
In
January.
January 2012.
Fine. So since this money for December 2011 will be due for collection in January 2012, it will form part of the inflow in 2012.
Yes, sir. Yes, sir.
So that is why we are showing these workings for 211. So that when we bring 2160 into 212, we will not have much question to ask. Because
Yes,
it's
sir.
an inflow. It is due for collection in 212.
All right. Thank you, sir. Well understood.
Any other person that is having any gray area?
Sir, how we got that 2,520,000, sir?
Okay.
Yes, sir. This is only the place I'm having issues.
2,520,000. Okay, maybe I actually skip something there. Or let me just give the explanation again. These 2,520,000, sir.
Yes, sir.
In these aspects, I was trying to explain for the whole 212. This is 212 explanation now. You know, this my slide here is for 211, right?
Yes, sir. Yes, sir.
Fine. For 212, the overall sales is what? Is 50,400,000, right?
Yes, sir.
40% of 50,400,000 is what? Your cash sales, isn't it?
Yes, sir.
The remaining balance will be your 60%, right?
Yes, sir.
Let me show it clearly. Let me show it clearly. So 50,400, sorry, we are taking our time. 5,400 multiplied by 0.6. You are going to have what? You are going to have what? You should have 3240. Isn't it?
Yes, sir.
So this 3240 is your total credit sales for 212, right?
Yes, sir.
So when you divide all this by 12, what will be the monthly credit sales?
Okay. Okay, sir.
So
2,520,000.
fine. So in 212 now, you know, if this is the value for December 212, it will be due in which month and in which year?
2012.
It will be due for collection in the next year, January 213. 213.
Yes,
Isn't
sir.
it?
Yes, yes. The next year.
Fine. Hope everybody is fine now.
Yes, sir.
All right, let's move very fast now so that we can go and do something else. So I have another slide where I will send you the whole breakdown of the solution. But let's move in this order. So in terms of the cash flow now, inflow, we have cash sales. Cash sales for 212, the cash sales is what? 2160, right?
Yes, sir.
Yes.
The cash sales
Yes,
2160,000.
yes.
What would be the receivable?
27,720. Yes, yes.
27 what?
720.
720.
Plus the brought forward from 211. You add it. That
No, I
211
didn't have that one.
okay, let me just write this. 27, what do you have?
720.
Let me just put this down this way. So
You
brought
brought
forward
forward from
from 211.
2,160,000.
If I'm to solve, we are just to add everything, but for understanding, how much is that value from 211?
2,160,000.
2 million once.
160.
Let me see something. When you add it, 27, 720 plus 2,160. You have it as 29,880. Okay, fine. So please, I might not want to present it this way. Just understand the whole receivable due in 212 is 27,720 plus what? Plus 2,160. You get your results of what? 29,880. So let's delete this. Let's delete it. I'm showing this for understanding purpose. Showing this for understanding purpose. So for 213, your cash sales is what? 213, your cash sales
23,040,000.
3,040,000. The receivable will be what? The receivable.
2,088,880.
2,880. The receivable. This is it. This is it. This is your total sales, right? 40% of this is cash sales, isn't it?
Yes, sir.
The 40% of it will be what? It should be 23,040, which you recorded as what? As our cash. Yes. The remaining 60% is what?
Credit sales.
Yes. So when you divide that total of credit sales by 12, you get the monthly credit sales, right? But remember, when you get that total credit sales, you have to remove that of what? That of December. Because it will be paid in what?
Kai.
It will be paid, it will be paid in January 2014. It will be paid in January 2014. So the total credit sales in 2012 is what?
31,680,000.
29 million.
31 million. 31,680,000.
31 million
680.
680.
Let me confirm. 7 multiplied by 0.6. Okay. This is it. The total credit sales is what? Just follow what I'm doing. It's 34, right? I just want to show you working. 34.
Yes, it's 34,560.
Yes, take notes. But the monthly credit sales is what? Divide by what? 12. You have what? You have 2,880,000.
2880.
2880.
Now,
Yes.
in 213, what will be your receivables? You know, in January, this 2880 will be paid in February, right?
Yes, sir.
In March, 2880 will be paid. So now that of December will be paid in 214, right?
Yes,
So
sir.
in simple term, this 2880 will be due, will have 11,2880, isn't it? We'll have what? 11,2880, because we only have collections 11 times. That of December will be due in 214. So it will be 2,880,000 multiplied by 11. So the receivable in 213, excluding the one we will bring forward from 212, will be what? Will be 31,680, right?
680.
31680, yes.
So plus the one due, that of December 212, that we are bringing
Yes.
forth to 213, to be
Two
what?
million 520.
You add
Two
it,
million 520.
520.
520. It will give you your total receivable, which is an inflow. So the result will be what?
34,200.
34,200.
Someone confirm if I'm not mistaken. It's 25,200.
34,200.
Yes.
34,200. Some people are not clear. You are not clear. Let me see your hand up. All right. So can you just tell me at which point you are not clear? Can one of you speak?
By 11 months.
11 months. You know, in the statement that any credit sales you made in a month, the collection period is the next month. So the sales you made in January, the collection period is what? It's February, isn't it?
February. Yeah.
The sales you made in February, the collection period is what? Is March.
March.
The sales you made in March, the collection period is what? April. The sales you made in April, the collection period is what? May. So it means that of December, the collection period will be what?
January.
January. So when you add the whole collection period, it will total what? How many times? What will be the period? 11. Isn't it 11 times?
If you
So
like
once,
remove that of December. Okay.
yeah, so once you get the credit sales for the whole year, once you get the credit sales for the whole year, divide by 12. So the monthly credit sales, multiply it by 11, because that will be the total inflow for that year. The 1 month will be due in the next year. So that is why I mentioned 11. Somebody else with another gray area. All right, so let's march on. Now, for 214, your car sales is what? 214. Your car sales is what?
34,
34, 560.
560.
560. 34, 560. So your receivable will be what?
For the 11 month, it is 47,520 plus,
7,
yes,
520. Plus the one due in January 214. You have it as what?
okay. Okay. 4,320. Someone should confirm. May I have 4,320?
Let's show it. In 213, your total credit sales is what? In 213, your total credit sales is what? Let me explain that. Or in 213, your total credit sales is what?
34,200. Total credit
34,
34 what?
200.
560.
Fine. 34,560.
Yeah,
When you divide that by 12, you have what?
okay.
2,880,000, right?
Yes.
So, you know, one of the months, that 2,880,000, that of December will be due for collection in what? In January 214. Isn't it?
January.
So it
Yes,
is
sir.
due. So you add it to this 47,520. So 2,880,000. This is the total receivable in 214. The result will be what?
50,400,000.
Fine, 50 million.
50,840,000.
Should be 50,400,000. Right? 50,400,000. 50,400,000. So, hope we are clear. Yes, it's something you have to pay close attention to. It's not difficult, but it's you have to settle down and look at it very well.
It's technical.
Yes. So, but once you settle down and understand the English, it's not something. So this is that about the inflow. So the next is the outflow, cash outflow. Cash outflow. Cash outflow. In relation to the cash outflow, what are those things that has to do with cash outflow?
Purchase.
Purchase.
Purchases.
Expenses.
Purchases. What is the story about purchase? In the question, that the policy on purchase is in agreement with the supplier's policy, which is to pay for all supplies in the months following. In the month following. It means every supply in every month will be due for payment in the next
The
month.
next month.
In the next month. In the next month. So now, same approach we apply to receivables, we apply. It means we'll have more payables in terms of purchases because they are giving those goods to us on credit. So now, in 212, your monthly purchase is what? 2.8, right? In 212, right? Your monthly purchase is 2.8.
Yes,
What would
sir.
be the annual purchase?
38,400.
Multiply by 12. Divide by. Okay. The monthly purchase is what?
33,600.
Fine. 33,600. That is the annual. When you
Yes, sir.
multiply 2.8 by, you have 33,600. 33,600. Fine. But is it the whole purchase that you will pay in that year? From the statement, is it the whole purchase? Are you going to settle your debtors with that value of money for the whole year? Is no.
No.
Because purchase for December will be paid in which year? The next year.
January next year.
Yes. So you must take note. In 211, you know you have purchases too. In 211. So the value of purchase in December 2011, we have to come in, right? In 212.
Yes.
We have to come in 212. So now, let's show that. Let's see what we can do. Let's show that. Let's show that. So purchases, let's say 211. The annual purchase is what?
33,600 for 2012.
For 211 now.
Okay,
2.4
211.
multiplied by
28,800.
28,800. Okay, I don't think
Yes.
I don't even need that workings. I don't need that workings because the monthly value of purchase is given already as
Yes.
2.4, as 2.4, which is for December 2.4 is will be paid in January 212.
22.
Yes. So now the overall monthly purchase, annual purchase for this 2.8 multiplied by 11 to give you what? It will give you what? 3,800, right?
3,800. Yes.
Plus 1 month brought forward into from 211. It will give you what?
33,200.
33,200. So that will be the total payables. Total payables in what? In 2012.
Oh,
In 2012. That will be the total payables in 2012. Let me come back again. Now, in the question, it is clearly put that the policy on purchase is in agreement with the supplier's policy, which is to pay for all supplies in the month following purchases, right? In the month following. Now, the monthly purchase is what? 2.8. It shows that if I should obtain goods in January, I'm paying in February. Right? I'm paying in February. The number of period I'll pay in 212, the number of period I'll pay in 212 will be what? 11 times. Because that of December will be paid January 213. That of December will be paid in January 213. So in simple term, and for 211, December purchase in 211 will be payable in what? In January 212. So it means that 2.8, 2,800,000 multiplied by 11 plus the value carried forward from 211, which is 2.4, will give me my total payable, the total cash outflow for what? For 212. Is that clear, please?
This one is clear.
Is it clear?
Yes, sir. It's clear.
Yeah.
You can apply same concept for the cells. Yes, you can apply same concept for the cells likewise. It's same approach. Yes. Madam Afiniki, are you raising up your hand?
No, I mistakenly pressed my phone.
All right, ma'am. So outflow now, payables. Payables. For 212, it will be what?
33,200.
Yes, 33,200. That is 2.8 multiplied by 11 plus what? 2.4 brought
Yes.
forward from.
Yes.
So please take notes. Payables, we have 33,200. Now for 213, it will be what? It will be 3.2 multiplied by 11 plus 2.8 brought forward. You get that? So it will be what?
Sorry, sir. 3.2.
Be anything in this regard. Everybody confirm. Punch your calculator. Don't just look at the screen.
Yes, 35,200. Abi,
Then
what's this? Okay, yes, 35,200 plus 28. That's 38. That's 38. Abi. Yes, yes. Let me see.
it's 8. Then for 214, it will be what?
So it will be 56 million.
56 million. 56 million. So this is outflow regarding payables for each of the year. So which other cash issue do we have? We have our cash expense. Our cash expense for
We have
two. Our cash expense for 212 is what?
240.
240, yes. 240 cash expense. Multiply by 12 to give us what?
288.
2,880,000.
Yes. You know, somebody was mentioning this value the other time. That this 4 million, right?
Yeah, I was the person.
Okay, fine. We'll get there. So the cash expense for 212 is what? It's 2,880,000. Why are we not doing any drama here? Because
No additional information.
it was stated clearly that where is it? The company's salaries and expenses were paid in the month they were what?
Yes.
Due. Any expense you incur in January will be paid in January. So no carry forward and no brought forward. So cash expense in the year 212. That is why we are multiplying perfectly by 12 to get and inputting that appropriate value. For 213, it will be what?
3,360,000.
3 million.
360.
360. And then for 214, it will be what?
4,320,000.
4,320,000. The next is salaries.
Rent.
Okay, rent. For 212, it will be what?
1.2.
That is 1.2 all through because we are just multiplying by 12.
Yes.
So 1,200,000 is 1,200,000. This is 1,200,000. The next is what?
Salary.
Salaries. In 212, it will be what?
5,160,000.
5,160,000. In 213, it will be what?
Same 5,160,000.
And in 214,
5,760,000.
5,160,000.
any other thing?
Motor van. Purchase of motor vehicle.
Very good. Motor vehicle. Which year is that?
2013.
213.
How much?
5 million.
It's a one-off transaction, so it's not that they were buying motor vehicle every year. You know? So that is why we will not put it in 212, 214. It's not every year they were buying motor vehicle. So the information make it clear that motor vehicle was purchased at 1st of July for this into the tune of what? 5 million naira. And that is why we are putting it in 213. Yes, it's a one-off transaction. It's an investment in motor vehicles. So, and it involves cash outflow. It involves cash outflow. That is why you are seeing it here. Somebody will ask, why are we not bringing depreciation? Depreciation does not involve cash
Not a cash item.
So Your total cash outflow will now be what now? For each of the years.
440,000.
So we have it as 42,440,000. For this to be what? Should be 52.
720.
And for this, it should be what? 67 and 7,280. So what will now be the net cash flow? Let
Cash
me say
inflow
this.
minus outflow.
Yes, cash inflow minus outflow. So the net cash flow will be what?
A minus B.
Yes. So this, okay, it's as if I didn't have total here. I didn't put total here. Let me put it inside let me say total cash inflow. This should be 29,880, 20,50,040, and then 20,000, 23,040, 34,200. Should have it as 57,42, 57,240. And for this, 34,560, 50,400. You should have it 35,84,960, 20,000. So if you want, you can say this is A. This is A. And you can say this is B. So the net cash flow. Please, you can mute yourself
7,600,000.
if your background is noisy. Then
Kehinde, please off your video and your background, please.
so the net cash flow will be what?
7,600,000.
7,600,000. For this, for 213, to be what?
Then we have
And for 214,
17,680,000. Please confirm.
680,000. All right. You need to grow to the point where you will not need confirmation. So that in the exam hall you will not be scared. I hope I'm getting it right.
Nature is calling, that is why.
So the next thing is our opening cash balance. Do you have opening cash balance?
Yes, sir.
yes, sir.
We brought forward from 211 to 212.
Yes, sir. The cash balance as at 31st December 2011 was 4 million naira.
So you can see it. So this closing cash balance will be the opening in what?
2012.
Yes.
In
20.
22. So we now have it as this opening cash balance. In case you don't know the format of cash flow, if you are doing FR, it will be much more discussed in that class. I'm not here to teach cash flow. So in case this format is strange, when you do cash flow in FR, you learn more about it. So the opening cash balance is what? It's 4 million. Where did you get? It's given in the question. It's given in the question. So What will be the closing balance now?
11,600,000.
11,600,000.
How did we get that?
You add the net cash
Opening
flow plus the opening cash balance.
Okay. So these are people that are doing FR.
I mean, I don't pass. I know do am again.
Closing
I
cash
didn't do it at all. It was exempted. That's why
balance.
I'm looking at it.
You have MSC, sir.
Yeah.
And that is why you should know better. So we have it as 11. So what would now be the opening cash balance in 213?
11,600.
11,600.
So this closing here will be the opening here. See, accounting is interesting.
Yes.
So the closing will now be what?
16,120.
16,120.
16,120. Then the opening in 214 will be what?
16,120.
16,120.
16,120.
The closing will now be what? One this that
33,800.
33,800.
3,800. So Ungwanu,
33,800 came from where now? When I don't come now. 33,800 came from where?
please, sir. 17,680 plus 16,120, sir.
Okay, it's okay.
So that will give you the closing cash balance for 214, sir. So that is what we've been doing for every other part. 76 plus 400 will give you this. 4520 plus 11,600 will give you this. 17,680 plus 16,120 will give us this. The rest, you solve it as assignments, 2 marks and 1 mark. So I'm expecting 3 marks from you. So is this question now? What can you tell me about this question? So the question, what can you say about this question?
I think the question, someone needs to be very careful. If not, you just pick the monthly sales and be adding.
Very well. I've seen
Attention to details.
students have forwarded their solution to me like that before. So once you are treating questions, please always just read very well. Read. Once you enter the hall, settle down. Breathe in and out. Yes. Tell the question, I'm in charge. Yes.
Okay.
I'm in charge. Yes. You want to take lead of that question paper. This diet you are writing November, tell it to yourself, I'm taking charge. Yes. So, and that is how it should work. So once you go to the hall, settle down, read the question, analyze it, bring down your answers, bring out your point from what you are reading, and put it in a way that makes sense, and we'll be fine. Yes. So please, on your own, go back and solve this question again. On your own.
Okay.
Go
Okay,
back.
please let me see the full distance now.
All right, sir. So go back and solve the question again.
Can you first send it?
I'll forward it. I'll forward it.
Okay.
So go back and solve the question again. Yes. You might experience hitches. Don't mind the fact that we'll solve it together. It moves smoothly. Yes. But I think with the explanation, you should be fine. But solve it on your own. Assume you're in an examination condition. And then let's see what you can bring forth. I have another question, but I will just move on like that. I think
Send it.
all right, I will forward it.
Let's start cracking bones.
All right, I'll forward it. So thank you very much,